There's a new bill you may have heard about that would, number one, end the federal income tax, and number two, would abolish the IRS. And instead, it would be replaced with a so-called fair tax. Very basically, instead of taxing income, they would tax sales, consumption instead. So number one, how likely is this to actually happen? Number two, is it even fair in the first place, despite being called the Fair Tax Act? And then number three, is it even a step in the right direction? Well, first, this bill is less likely to pass than somebody stopping Congress members from insider trading. Or in other words, not a snowball's chance in hell. If this somehow does pass the House, there's no chance it's getting through the Senate, and even if it does, Biden has already said he would veto it. The reason is because there's nothing that politicians like more than power. And there's nothing that screams power more than being able to seize people's assets without trial with the IRS. Squeeze your political opponents, choose how much income you are taking away from a population using for your own political gains, and even better, if you can withdraw or confiscate assets from one political party, your enemy, and transfer it to your base. Now, despite the fact that this particular bill has almost zero chance of becoming law, discussions about this type of thing will become more and more frequent in the future as the government has gotten so large that we are on a financial collision course. It cannot continue to increase its spending the way it has without causing complete economic collapse. So at some point, either we're going to have to figure out a way to magically make a lot more money, or for the government to have to stop spending as much. By the way, real quick, wanted to let you guys know, just in case you're interested, I'm going to be speaking at Jason Hartman's Empowered Investor Live Conference. It's in Scottsdale, Arizona from January 27th through 29th, just a couple of weeks away. There's going to be a ton of fantastic speakers there. I would love to see you there. I've got a link in the description below. So because this will likely be a recurring theme and something people talk more and more about into the next 5 and 10 years, we have to ask, is this even fair, despite it being called the Fair Tax Act? As Joseph Salerno points out in this fantastic lecture on Mises.org, there is no such thing as a fair tax. What you have to do is take a step back and understand what's going on when a tax takes place. And to do that, we have to understand what happens when there's no tax, aka a free and voluntary exchange. When any two parties decide to exchange with each other, either two goods, two services, goods for services, or money for goods or services, what is taking place at that moment is a voluntary choice to engage in exchange with each other. Whenever you buy a burger, it's because you value the burger more than you value the $5 in your pocket. At the same time, the restaurant values the $5 more than they value the burger. They're not objectively more valuable than each other. Otherwise, one party would not be engaging in that exchange. But because both parties can profit by getting something they value more, by giving up something they value less, that exchange will happen, and both parties are better off as a result. This is why people every single day voluntarily give up their time, their hours, their labor in exchange for a paycheck, because that paycheck is worth more to them than that time is by itself, and that labor is worth more to the company than those dollars that they're giving up. It is, by definition, a profitable exchange for both sides. However, when a tax takes place, this is taking money from somebody for something that they would not be buying otherwise. There's no cheeseburger tax to pay for cheeseburgers for people, because if people want cheeseburgers, they just go buy a cheeseburger. And so the purpose of the tax is to force people to pay for something that they would not want to buy otherwise. Therefore, no matter what the tax rate is or what the person is paying for, by definition, it cannot be considered a fair tax. And one more point about that is that if you cannot opt out, again, it cannot be considered fair. If it's done by coercion and you have no choice to say no, then it's really just theft. And if you do have the ability to opt out of specific taxes and voluntarily give up access or rights to using particular services that those taxes pay for, then those services become just like any other market competitively priced service like business, and they might not be able to pay for themselves anymore. So clearly, regardless of whether we have the income tax or this new fair tax on consumption, either way, it's not really fair. But would this be a step in the right direction to abolish the IRS, get rid of all income tax, and only tax consumption? We have to remember that income taxes have not always been around. In fact, the United States existed for its entire history, minus the Civil War, without an income tax. It wasn't until 1914 that the United States started an income tax. Prior to that, the federal government got basically all of its income from tariffs alone. And so just because we have income taxes today doesn't mean that that's necessary, that that's the only way for the federal government to pay for its expenses, or that there are no other options. So when you weigh the pros and cons of taxing an economy, taxing individuals and corporations on income versus taxing them on consumption, on spending, there are a lot of different changes that happen. Number one, you realign the incentives in the economy for economic growth. Because contrary to popular opinion, you cannot consume something that has not first been produced. And production only happens as a byproduct of savings, as does investment. And so when you tax something, you're incentivizing that thing to not happen. That's why we have a tax on things that we don't want to happen, like drinking alcohol and cigarettes. The government is saying to all American citizens, we don't want you to participate in these activities, so we're gonna make them very expensive to discourage you from doing them as much as possible. So why in the world is income taxed? If we want a prosperous society, we would like to incentivize income more and more instead of less and less. And as you switch over from taxing income to taxing consumption, that means that a person can control how much they are taxed. They can make as much as they want, keep it all, and to the extent that they save and don't spend, they get to control how much they're taxed. So it incentivizes people to save more and more and spend less and less. Now, you've probably heard of, the secrets of the rich, of getting assets and then taking out debt on those assets, because then you can get income tax-free. Debt is tax-free. When you get a big loan, you don't have to pay taxes on that, because eventually you're gonna have to pay that debt back. And the way you do that is with income that you're gonna be taxed on. And so in today's system, we incentivize the accumulation of massive amounts of debt because debt is the only type of income that is tax-free. So if they eliminate that and now regular income is tax-free, there's no additional incentive to taking out debt and having that higher interest rate. You build a much stronger foundation on the system that doesn't incentivize this massive piling up of debt for no good reason. The second thing you do with this switch is that you close loopholes. Right now, the tax code is thousands and thousands of pages long, and it takes literally entire industries of lawyers and accountants and tax professionals dedicated their lives to studying this, to figuring out, hey, if you do this and don't do this, then we can save you a little bit more on taxes. And you have entire companies and organizations dedicated millions and billions and overall the economy unending amounts of money in order to figuring out what's the best way to navigate the tax system so that they can pay less taxes. And they realize, hey, if I dedicate, $1 million to trying to save on taxes, hiring the right people, doing the accounting right, looking into this, hiring the right legal experts, well, that might save me $10 million in expenses. And so that's a worthy expense. But if you just eliminate all of that and eliminate the tax code, well, then all those expenses goes out the window. And so now suddenly people have tons of income freed up to be able to spend on things that would actually grow the economy. Not to mention, this is some of our best and brightest. It takes very intelligent minds and hard workers to be able to go into these industries to be able to understand the tax code. And all of that brain power would be freed up to be participating in something that actually helps the economy grow. The third thing is that you now get to abolish the IRS because there's no more need for them. There's no more tax code. There's no more complex system of deductions and credits and what's being taxed and what kind of things you can do to get around it. And then processing all these income tax returns. None of that exists anymore. So you don't need to have the government spending all this money to fund all these IRS agents who are extremely inefficient at their jobs in the first place. And now you free up all those expenses and you just replace it with something extremely simple like, 23%. like a 23% national retail sales tax. Now, there's some disagreement about this, but in general, most experts believe that a 23% tax on consumption would translate roughly to a 15% income tax, plus the 7.65% payroll tax. This means that it would translate to a massive reduction in revenue for the United States government. But you also have to take into account the fact that incentives have flipped. And so if somebody makes 50 grand, instead of having to give 20 of it to the government, now they get to keep 50 grand. And the only time they have to lose it is when they decide to go out and spend it. So people are now incentivized to save as much as possible. So at least temporarily, and this is the key, temporarily, the income for the United States government will drop extremely low. It'll be drastically less. Now, there will also be less income for the government because they'll have less control over how much income they have. Right now, it's a messy process, but if the government wants more tax revenue, all they have to do is Congress has to decide, hey, we're going to tax, these income brackets at these higher rates. And in general, they're going to have that amount of income come in. Now, obviously, it doesn't always translate to dollar for dollar what they expect, because if you start to tax the economy too much, now there's less money in the economy for growth. And so they might have anticipated this much money because they're trying to take this much as a percent, but the whole pie shrinks. And so they actually get less than they thought they would. With a fair tax on just consumption, well, you have a lot less control over how much money you make, because if suddenly you say, hey, 23% on consumption, we're raising that to 30%, well, it's very easy for people to just say, I'm going to just spend less then. Versus today, it's not as easy for people to decide, well, I'm going to make less money in income just so I don't have to pay extra taxes. That usually doesn't happen. Now, probably 50% of the US population thinks that it's a bad idea that the government gets less money in income, because if they get less money in income, they'll have to spend less. And to that I say, spend less. To which about half of America would probably respond, well, if they have to spend less money, then that means they're not going to be able to pay the politicians and the bureaucrats that they employ. And to that I say, fire them. Now, the kicker here is that if something like this were to actually get through and become reality, this would actually translate into much higher revenue for the US government long term. Not short term, but long term. This is because it would provide a much stronger foundation for economic growth and allow our economy and our individuals and corporations to prosper and make way more income. And eventually, once you start making a lot more income, the amount of money you're going to spend might be a smaller amount as a percent, but it's going to be a much larger total overall dollar amount. I think I heard this example from Peter Schiff first, but imagine two neighbors who both make $100,000 per year. One of them spends all of his money every single year on the newest clothes, constantly going out to the nicest restaurants, getting a new car every year. He looks a lot richer than the other neighbor. The other neighbor doesn't spend any of their money. They save it all. They invest it all. And so they don't buy new cars. They don't buy fancy clothes. One of them will look a lot richer. Let's say this happens for 20 years straight. Most outside observers would think that the one who's spending the money has a lot more money, but in 20 years, they still have $0 to their name. They're still broke. The other one, though, who's been saving and investing for 20 years, suddenly now starts buying a bunch of the stuff that this guy could never afford. He starts buying Lamborghinis instead of Mercedes, and he ends up doing a bunch of renovations to his house, and he goes on all these trips around the world instead of just going to the nice restaurants around the street. This is because he's worth many millions of dollars now, where the other one has $0 to their name. This highlights the truth that whether for an individual, a company, or an entire nation, if you spend less, save more, invest in production, ultimately you'll have a much larger pie to draw from. And so if the government gets a smaller and smaller portion of that pie, they might still get a much larger amount in total because the pie has grown so much larger. Now, ultimately, like I said at the beginning, I don't think this particular bill has any chance of succeeding whatsoever, but this discussion will probably become more and more popular over the coming years, and changes that are talked about in this bill may become more and more likely in the future, or at least one can hope. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.